and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Kremlin says talks between Vladimir Putin and U.S. envoys Steve Witkoff and Jared Kushner were very useful, despite both sides failing to reach an agreement on a plan to end Russia's war. Meanwhile, Ukraine's President Volodymyr Zelensky says he's ready to meet with U.S. counterparts if there's any sign of clear progress.
We are waiting for the results in America-Russia negotiations, today's results, and I will react according to the results. If I feel that we can count on real, specific dialogue, not just words, with some result, we will meet, and he's very welcome to Ukraine. But I'm not sure that they are up. I mean, on this way, this day, they're ready to come. But who knows?
Well, let's bring in Bloomberg's chief Europe correspondent, Oliver Crook. Ollie, what are your takeaways from these Russia-U.S. talks?
Yeah, Francine, it's hard to really get a sense of what the talks actually accomplished after those 5 hours that were spent in Moscow by Steve Witkoff, Jared Kushner, and Vladimir Putin, those discussions that ranged for many, many hours yesterday. And all we've really got was a bit of a readout from the Russian side, from which they said that the talks were constructive. They were very informative, but they failed to reach a compromise on some of the critical issues, including those territory swaps and those discussions around the front line of the battlefield and where the fighting would be paused, and whether or not there would be some exchange of territory. That, of course, is one of the thorniest issues that we understand from all the foreign ministers that we've spoken to, and that there is still a lot of work left to be done, both for Moscow and Washington. I think the takeaway here, Francine, is that we began this sort of diplomatic process about a week and a half ago when that 28-point plan first emerged, and things were really trying to move from the Trump administration's perspective at warp speed. We are now closer to diplomatic speed in terms of where the progress is on these discussions. This is a process that began in Geneva, then moved to Florida, then to Moscow. The question is, where will those next talks be held and at what level, which will give us an indication of how much progress has been made thus far.
Yeah, foreign ministers are also meeting at NATO to discuss the alliance's support for Ukraine. So what's the latest, Ollie?
Yeah, so I spoke to a number of foreign ministers as they were filing into this building a little bit earlier today, and I think that for many of them, they're still also in the dark in terms of what is actually included in this 19-point plan ever since it was amended from that original 28-point plan. That original 28-point plan really prompted a great deal of alert here for the NATO countries from part of the alliance, because there were a number of provisions within that 28-point plan that were not just related to Russia, not just related to Ukraine, but actually would impose restrictions on NATO in terms of their own enlargement, not just by including Ukraine, but also including other countries. So that was a major issue and a major concern for these NATO countries. And many of the European leaders who saw that proposal for the very first time, speaking to some of the foreign ministers as they walked in, I think the most critical issue, the one in which the Europeans could try to get a seat at the table and produce the most leverage, is on this issue of frozen assets. Have a listen to what the Lithuanian foreign minister told me just about an hour ago.
Time is ticking away, and this is obvious. We have now only 2 weeks to make a decision till European Council, and I am really optimistic that we will make it. Otherwise, I will be really big pessimist, because we do not have the alternatives for finances for Ukraine. And this solution that was provided as the concept from European Commission is a good one. Now we are waiting for the legal proposal, and it should be coming out in these days, in upcoming days. And I have the hope that it will push forward the process.
So some urgency there from the Lithuanian foreign minister in terms of the Europeans getting their act together and moving on those Russian assets. We should say we heard from the Belgian foreign minister as he was walking in. And remember, Belgium has really been the big hurdle to this, saying that the legal proposals that the Commission has put forward so far are not sufficient for the Belgians to sign on to moving on those Russian frozen assets. And Francine, I think that the sort of last thing that we're focusing on here at the NATO foreign ministers meeting is a conspicuous absence. Marco Rubio not in attendance here, not going to be able to brief these ministers who are eager to get an update on how negotiations are going with Russia.
Ollie, thanks so much. A lot going on, of course, that I know you'll stay on top of. Bloomberg's chief Europe correspondent, Oliver Crook. Now, traders raising bets that the Fed will cut rates after President Trump hinted again that Kevin Hassett is a front-runner to replace Jay Powell as Fed chair. Well, we're now joined by Henrietta Pacquement, Senior Portfolio Manager at Allspring Global Investments. Henrietta, thank you so much for being here today. When you look at, first of all, what's expected of the Fed, I know there's a number of data that we're expecting in the coming days and weeks. Is it a cut in December and then again in the new year?
I think if you look at expectations at the moment, yes, the markets are expecting cuts coming forward, and I think that is also encouraged by the news on the Fed chair and what we've seen there. So the way we're looking at it on the short end is that cuts are expected, but we'll see what that means for further up the curve in terms of maturities.
Henrietta, overall, you're expecting sticky inflation across the board.
And that I think is a challenge at the moment. We are sort of seeing actually resilient growth in the US, and we are seeing sticky inflation. So I think that is what complicates the job of the Fed at the moment in terms of expectations. And so we'll have to see how that evolves. I think it was really interesting to hear the potential new chair of the Fed sort of saying that inflation has momentum. And I think that'll be interesting to sort of see how that guides his views going forward.
So, Henrietta, if you boil it down to some of your central message to bond investors, how do you construct your portfolio? Where do you want to be invested in?
So at the moment, the real focus is maintaining income in the portfolios and a degree of diversification. If you look across the board, obviously spreads are pretty tight, reflective of the positive environment and the sort of strong fundamentals actually that we're seeing from the companies that we invest in. Opportunities again, if you look more broadly in the securitized space, so looking to capture those and looking at it internationally and sort of more looking at global diversification as well in the mix of the portfolios from a fixed income perspective.
So when you look at sector allocation, what looks good at the moment?
I'm not sure I would go so far as saying that what looks good. I think given where spread levels are, I think what is interesting, and I think what investors are particularly looking to fixed income for, is the level of yields that is available. I think that again sort of plays into our theme from an income perspective, and that's what we're looking to sort of have in the portfolio. We're not necessarily looking to stretch in terms of credit quality at this point in time. Precisely for the sort of spread comments that I just mentioned.
You're right. I should ask what looks like less bad, but what looks interesting. Henrietta, give me a sense, the last, I guess, 10 days, what really drove a lot of anxiety in bonds is what happened in Japan and what happened in the UK. And there does seem to be an understanding that they're responding to investor demand to boost short-term borrowing. And we've seen that from both countries. How does that dynamic shift in 2026?
I think the sort of long end of the curve is an interesting area, and we are expecting volatility there. Obviously, that will depend on the sort of supply patterns that we have. So really interesting to see certain geographies looking to issue on the sort of more medium or short end of the spectrum. Potentially not wanting to pay up for the sort of yield levels that we're seeing on the longer end. That is something that's obviously understandable. However, it's a bit of a dangerous game to play. You don't want to sort of shorten your reinvestment profile too much from a sovereign perspective, particularly in this kind of environment where deficits and the sort of supply of treasuries globally is likely to be pretty high.
Henrietta, thank you so much for joining us. Henrietta Pacquement, their Senior Portfolio Manager at Allspring Global Investments. Now, we are looking at live pictures of the presidential plane of the French president just arriving in Beijing. We know that this will be an extremely high-stakes meeting for Emmanuel Macron, who will lobby his Chinese counterpart this week to try and avert tariffs on dairy and pork exports. to China. Now, according to a couple of French officials, we do have a delegation, I think, on that République Française plane with the president. France has also resolved some of the outstanding trade disagreements with China, but tariffs on dairy and pork seem to be those that are still at risk, and will focus on French discussions in China. Then they will talk most probably about everything that's been happening also in terms of global stability, not only the Trump administration, but also Ukraine. Earlier this year, we know that Beijing had imposed some preliminary duties on European brandies. That French producers then won a partial reprieve after Remy, but also LVMH's Moet Hennessy and Pernod Ricard committed to keeping their prices above minimum levels. So again, it's ongoing negotiations. This extremely high stakes for President Macron, who also sees himself as a little bit of a champion for Europe. Coming up, we're joined by Tim Adams, president of the Institute of International Finance. We'll discuss stress tests, capital requirements, but also the outlook in general for the finance sector. That's next, and this is Bloomberg.
For me, I think that being director of the National Economic Council is my dream job. And if the president asks me to be Fed chair, then I'll do it. But if I'm not Fed chair, don't be disappointed for me, because I love the job that I have right now.
Well, the U.S. National Economic Council Director Kevin Hassett speaking with the Carlyle co-founder and co-chairman David Rubenstein. And you can watch more of that interview on the David Rubenstein Show on Bloomberg TV tonight at 6 p.m. London time. Now, HSBC has appointed Brendan Nelson as its next chair, replacing Mark Tucker, who led Europe's largest lender for much of the last decade. Nelson has been serving as interim group chair since October, and his appointment follows a month-long search. Well, with us now is Bloomberg's managing editor for EMEA Finance, Tom Metcalf. Tom, I mean, this was kind of unexpected. So why did HSBC go down this route?
Yeah, well, they've gone down the insider route. I think some of the analysts are saying this is very much a safe pair of hands. I think the most interesting thing is sort of just how public the process was, as you no doubt expect with an HSBC. But they did go through this whole roll call of external candidates. And look, they're looking for someone with Asian experience, banking experience, and ideally someone who knows HSBC. So I think ultimately the board, having really done an extensive search, swung back down towards the internal candidate, which in part reflects just what a demanding role this is. You know, loads of travel. Being a UK board, it's extremely, or not as well paid as, say, it would be in the US. So, you know, for those in the run-in, it's actually quite a tough sell.
So, Tom, what kind of a chairman will he be? Is the chairman very hands-on, or is the chairman kind of there in case the CEO messes up?
Well, I think under Mark Tucker, it was, famously hands-on. I suspect there'll be a very different culture and certainly dynamic with the CEO, George Osborne. So I suspect, he'll step back a bit, maybe be a bit more low profile, let George Osborne kind of, be the front person, as it were. But this is someone who's super competent, got all the sort of sense of the operations. So I can definitely see why the board ultimately went for this. And one last interesting point, Brendan Nelson is 76, so it's unlikely he'll be in place for as long as a Mark Tucker was. It was 8-9 years. So that adds another dynamic in the year ahead.
So, I mean, geopolitics, I imagine, will be left, right and centre. But what will his tenure be focused on?
I think, making sure the ship is stable. There's a lot of changes going on under the CEO, and probably effectively just making sure that, HSBC kind of does navigate those things with as little sort of ruction as possible, because it's such a difficult position that bank in particular is in. It's got Beijing, it's got Washington, and then it's listed in London. So one of the most demanding jobs in finance. Hats off to HSBC for finding their man.
Yeah, and good luck to them. Tom, Thank you for joining us. Tom Metcalf, Bloomberg Managing Editor for EMEA Finance. Now, the Bank of England cut its estimate for how much capital British banks need for the first time in a decade. The central bank promised to consult on rule changes next year. And the move potentially paves the way for higher lending and bigger buybacks. Well, let's discuss all of this with Tim Adams. He's president and chief executive of the Institute of International Finance. Tim, so good to speak to you.
Thanks for having me back. Always
this is great. We were just talking about HSBC. I mean, first of all, for me, it's very different what the U.S. is doing under the Treasury Secretary and some of the regulation there, and the way the EU is going. What are you feeling in the U.S.? What are banks telling you?
Well, the U.S. is leading on modernization of regulation. Mickey Bowman, the vice chair, is leading this effort, but Scott Bessent's certainly involved, Jay Powell. And they're taking a wholesale look at the regulatory framework affecting banks and non-bank institutions. And I think that we can do a better job in terms of releasing capital and promoting growth and capital formation. And I applaud the effort.
But, Tim, is the U.S. just far and away the most progressive? Or are they just talking at the moment?
Far and away the most progressive. They're leading the convoy. I think the UK sent a pretty clear signal yesterday that they don't want to be left behind. Yeah. And the EU is trying to figure it out. I think we'll see more out of the EU next year.
So the EU is lagging. If it's lagging, why is it lagging?
Well, it's just the structure of the EU, and they're just much more cautious, less of a risk-taking environment. But I think they understand what most advanced economies understand. We need economic growth, we need higher productivity, we need private sector capital formation. Banks and capital markets are crucial to that.
Tim, I know we're basically your pit stop on the way to the Middle East, right? Yeah. How's the Middle East doing?
Great. Well, they probably could use higher oil prices, but the place is booming. I mean, off to UAE, Saudi Arabia is certainly doing well. Enormous demographics, but they also want to reinvent their economies away from hydrocarbons, and we're seeing that in terms of AI and data centers.
When you look at banking in general, and I hear this from all corners of the world, is that because we're redesigning capitalism with maybe more fragmentation, the banks will suffer. So the banks, will they service different clients? So is it winner takes all for the U.S. banks, and the rest have to scramble to see how prominent they are in Asia, for example?
Well, I think that we're all scrambling. The world is being rewired in a post-Trump world, right? And so we see new relationships, new alliances, new capital flows. The ASEAN economy interacting with the Gulf economy, China in Africa, Canada looking for new markets. So this is just a rewiring of the global economy, and capital flows will mirror that.
But you've said that, this week's package from the BOE mean they don't want to be left behind. I mean, does the requirement to cut capital actually go far enough?
Well, we'd love to see more, but I think it was an important indication of where the bank wants to go and where this administration wants to go. The chancellor's also been very pro-growth oriented. Like to have seen more last week, but I get it. But I think it's an important signal that the bank understands that capital is crucial. Releasing capital is crucial to economic growth and higher productivity.
What about ring fencing? Again, there's a lot maybe that this country could do to be on par or not too far behind the U.S. Is that fair?
I think it's fair. I don't think they're there yet. I think we have what we have. But I think what we saw yesterday, both the stress test and the approach to releasing capital, was an important first step. I think it's a fundamental shift in the thinking of the Bank of England.
Crypto. Yeah. What do you do with crypto at the moment? So if you look at, the Basel Committee, it's, changing some of their standards of how banks should be treating any crypto they own. Do your members want them to loosen it?
They do. They wanted to focus less on technology and just risk across different asset classes and different kinds of technology. I think the Basel Committee will consider it. What we are seeing is an explosion in the use of stablecoins. The U.S. is certainly supporting that via the Genius Act, which I think is just becoming the beginning of what we'll see as maybe a $2 or $3 trillion market, stablecoins. But digital assets and digital currencies are here to stay.
What do you think crypto? I mean, we look at Bitcoin because it's the most famous, quite a lot. I don't know whether it's tracking other asset classes, so it's becoming more normal, or because of volatility, you don't know exactly what it is, and it could be dangerous for a lot of the banks.
Right. Well, I think it's a speculative asset, and we've seen just the wild price swings. But I think we need to think about digital assets and currencies more broadly as a new form of technology, tokenization of deposits, tokenization of assets. That's the 21st century finance.
Tim, talk to me a little bit about private credit or private markets.
Yeah. Well, the Bank of England has been leading on that, and Andrew Bailey specifically in terms of looking at potential risk profiles out of private credit. And I think we'll see more this week announced from the bank in bringing in a number of institutions to do a long-term study of the risk profile. They've grown enormously, maybe a $2 trillion asset class with enormous exposure to the banks. So I think it requires additional study.
What, a study or a regulation?
Well, I think first we just need facts. We don't have facts, right? There's enormous opacity in terms of the black box nature. So I think once we have the facts, and I think Governor Bailey's trying to get those facts, we'll know what to do from there.
But is there a danger that if the UK starts it alone, then everything will just move elsewhere?
Well, it's possible. We always see risk arbitrage occurring. But wearing his hat as chairman of the Financial Stability Board, I think the governor has the capacity to have a broad reach, and I think others around the world are interested in seeing what this produces.
Tim, what's your biggest concern about the U.S.? I know we talk, on this show we talk day in, day out about AI valuations and whether it's systemic and whether it could actually take down a bank. because of their exposure to it? Or is there anything that we don't worry about that you worry about?
I don't worry so much about AI. Look, every C-suite I visit is investing heavily in AI for their own firm, for their industry, for economic growth. I think it truly is a transformative technology. Will it continue on a linear path? Probably not. We'll see bumps along the way, but I do think it is transformative. I worry about the U.S. as just the U.S. consumer. The low-end consumers, working-class Americans, are really stretched. There's an affordability issue, and we're reliant on high-income consumers that are reliant on the stock market. So I think there's a vulnerability in the U.S. consumer.
Is there anything that banks or policymakers can do now to temper this? I guess what would be the outcome of a K-shaped recovery that goes bust?
Yeah, well, they are provisioning. We're late in the credit cycle, but everyone gets that. So I think everyone's in a very cautious mood. Well, I hope that I'm wrong in terms of the consumer. But there are ways that the administration could pursue certain policies that might be helpful to consumers. But I think the banks in the U.S. are prepared for a turn in the credit cycle whenever that happens.
I know the IMF does great events. You had Treasury Secretary Bessent also speaking at the last one at the IMF. What will you focus on in the next 12 months?
Well, continuation, saying the transformative events that are occurring in terms of AI, digital transformation, quantum computing, private credit, and just this rewiring of the global financial system, new alliances, new relationships. I don't know what the new equilibrium looks like, but I think we're prepared for a world in which the U.S. economy is no longer the buyer of last resort. And then we got to figure out China.
So interesting. Tim, thank you so much, as ever, for joining us. Tim Adams, President and Chief Executive of the Institute of International Finance. Now, some other stories making news today, and a plan to overhaul Germany's state pension system is in doubt after a test vote by lawmakers in Chancellor Friedrich Merz's Conservative caucus. Well, sources say among the 208 members of Merz's bloc in the lower house, at least 10 voted against the law in the non-binding ballot. It's understood about 3 or 4 abstained. As Merz's ruling coalition with the Social Democrats only has a majority of 12, it could fail to get the bill through in a formal Bundestag vote, potentially triggering a full-blown government crisis. Now, BMW is pressing the European Union to formally adopt a trade deal with the U.S. that would give the German car maker respite from ongoing tariff pressures. Now, tariffs imposed by the U.S. and EU have weighed on the luxury car makers' earnings, with German peers Mercedes-Benz and Porsche also getting hit. The U.S. is BMW's second biggest overseas market. And China has condemned the UK for again delaying a decision on whether it can open a new embassy in London. Beijing wants to build what would be the largest embassy in Europe on the site of the old Royal Mint, close to the City of London. A decision had been due in October, but that was pushed to this month amid a scandal over alleged Chinese espionage. A decision will now be made on January 20th. Now, coming up, we'll discuss European capital markets with the chief executive of the Athens Stock Exchange. That's next. We're also getting live pictures of the French President Emmanuel Macron just arriving in Beijing. Quite a lot going on today, but this is 3 days of a state visit of Emmanuel Macron. What he has to do is get some deals, especially when it comes to pork tariffs. You can see Brigitte Macron there with her husband, the French president, just arriving in Beijing, and then he has a full booked schedule to try and get the Chinese on side after they taxed, for example, some of the spirits, but then they found an agreement in the last couple of months. So on the agenda, it's geopolitics from Mr. Macron, it's trade, and also how to get a better deal for European companies. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Russia describes talks with the U.S. as very useful, but there's still no deal to end the war in Ukraine. The NATO foreign ministers meet to discuss unfreezing Russian assets to fund Kyiv. HSBC unexpectedly appoints the interim chair, Brendan Nelson, to the role permanently after a months-long search. Plus, Airbus trims its delivery target for the year after a potential problem with body panels. That means hundreds of aircraft need to be inspected. Now, there have been calls from across Europe for a pan-European stock exchange that would make it easier for investors and for companies to access capital. Now, in a step towards this, Euronext recently acquired the Athens stock exchange, and as Greece emerges from a decade-long debt crisis, the deal is seen as a chance to re-establish the Greek markets on the global stage and attract more international investment to try and grow the economy. Well, I'm delighted to be joined now by Yianos Kontopoulos, Chief Executive of the Athens Stock Exchange. It's so great to have you in London.
Same here.
Congratulations on the deal.
Thank you.
When you look about the European Stock Exchange, I mean, this is an idea that's been floating around by European leaders. I don't know whether it gets anywhere, but what are the actual benefits of that?
Well, I think the main concept is to basically create a single liquidity pool, which is probably the most important dimension for a market, to basically deal with technological requirements. So you have good advanced technology that you're able to share the cost across a bigger pool, and ultimately is about global visibility, right? So it's the U.S. and then we need to have Europe as strong as possible.
Is there a danger that some of the, smaller local stocks would feel left out if there was a capital that would center around Europe?
Well, if you have a large enough market, then you have also the other side, which is the investors, developing a certain attitude against, larger stocks, smaller stocks. So if the pool is large enough, even smaller companies can actually do better.
Talk to me about IPOs in Greece. What are you doing to make it more attractive? And do you see, good things in the pipeline?
Yes, it has been a pretty good year. Healthy raising of capital, good pipeline of IPOs. I think in the last 3 years, we managed actually to resuscitate the market, and that, I think, has made a huge difference. And the advent of Euronext, I think, if anything, raises the branding of the market itself. And I think everything else equal, it increases the probability that more firms will be coming in. So that's the plan.
How did you manage to revive the market? Is it through some of the initiatives actually in Greece at the Athens Stock Exchange, or is it that there was just such dryness for such a long time that people then wanted to do something?
I think it's a combination. If you remember, about a couple of years ago, you had asked me, when are we going to have a large IPO? Yeah. And the moment we had the Athens International Airport, I think that solved a number of different questions out there in terms of whether the market is liquid enough. Yeah. And that, I think, was a paramount moment. The fact that returns have been exceptional in the last 4 years in Greece has also contributed. Mm-hmm. Lots of work from the team at Athens in terms of taking advantage of the very good macro picture in Greece, because Greece has differentiated itself from Europe and even the global economy and the group of emerging markets. So that all has helped. It's just a matter of putting the work and making sure that, you stand out.
But there are so many companies that want to, either become private or stay private. And that's really changed in the last, 4 to 5 years. Yeah. Does that just accelerate?
Well, there are fads, there are cycles, and then there are macro cycles. So there are going to be factors that are going to make it potentially harder to continue on that path. And also, I think there is, a quest right now, especially in Europe, for scale. And that scale is very hard to do it in private markets, truly. You really need the power of public markets to do it. And that's the bet, I think, for Europe as a whole.
Do you think a lot of companies are scaling up? This is, one of the single kind of fixable issues that people talk about, is that the U.S. just scales so much quicker than then they become first mover advantage.
Of course, but, there are smart ways to do it. There are always gaps. And the question is, there's got to be some political willingness in this to deal with the details, and some of the details is, different legal frameworks and so on and so forth. Having a large platform like Euronext expanding also helps. But ultimately, we need to make up our minds. We are the largest provider of savings to the U.S. over the last 10 years. It's not Asia. It used to be Asia 10 years ago. But the last decade is Europe. So we need to think about ourselves a bit. My money is on Ms. Albuquerque, the European Commissioner. I think she's pretty decided to move things around.
Okay, I like that. I mean, then there's the questions of capital markets union. And do we get that in our lifetime?
Absolutely.
Really?
Yes, absolutely.
I've been asking for the last 15 years.
I don't think we have a choice. Honestly, I don't think we have a choice. And I think just the mere fact that people at the political level are discussing it with a lot more intensity than before will make a difference. But now is the moment. We have a chance.
Yianos, talk to me a little bit about the process of being acquired by Euronext. Was it an easy decision?
Well, good thing it was not my decision. It was the decision of the shareholders. And I think it was, there's always a moment for things. You can never predict this. But at the end of the day, I think this is a market that stood out. Yeah. It has, I think, a lot of prospects in the coming years, exactly because of some of the elements of catching up, but not just catching up, but actually redefining yourself. So I think that the combination of having this opportunity of getting into the Central European stage, sooner or later would have happened, and the moment was now.
I mean, I know you've lived in London for many years, and we talk about, London as a financial center. Is it working? Is it not working? There's a lot of data points that say, look, it's not working as well as it could or should have been. Yeah. Does that mean that the whole of Europe loses to the U.S.?
No, I think, again, there's a little bit of reset. If you think about it now, and lots of people don't know that, Euronext is basically trading in terms of volumes and in terms of capitalization is now double the size of London. So that was not in the cards for a long while. So, you need to run with the momentum, and then ultimately you need to create that sort of maybe expanded union. We'll find out.
You think we'll have an expanded union?
Look, if we get to the European side actually formulating in a much bigger fashion, I think the next step is actually easy.
When you're looking at sectors, where do you think a lot of the IPOs or even bullish sentiment will come from? Well,
look, the most interesting, I guess, concentration right now of interest is in the defense side and also on the technology side. But as we all know, these are very hard things to predict. And I think we should go with where the good companies are. You need those type of companies that stand out because those are going to capture the imagination of the investors.
What do they ask you when, it does seem that the markets or certain parts of the markets, I'm thinking about AI, is really priced to perfection. When a chief executive, you discuss with them IPOing or some of their options, do they worry about the moment in the cycle we're at?
Well, I tell them it's all about competing for a vision. And I tell them that your future capitalization in the market is whatever the price is going to be on our market tape, plus the present value of the stories you're going to be sharing with your investors. So what you need to do is you need to do that heavy lifting, that inspired storytelling, and you're going to be fine. Forget about the noise. There's always going to be something out there. Focus on the story.
Yianos, thank you so much. Great to speak to you, actually. Yianos Kontopoulos, there, Chief Executive of the Athens Stock Exchange. Now, in other corporate news, Airbus has cut its full-year delivery target after problems with its best-selling A320 jets. The plane maker says it expects to hand 790 planes to customers this year, down from its previous target of 820. So let's bring our aviation and transport reporter, Danny Lee. Danny, how bad is this for Airbus?
I mean, this is a small cut and a small winding back of expectations of what it can deliver by the end of the year. And in many respects, the market investors feel this is a bit more realistic. Maybe that's why Airbus's share price is a little bit higher today, up around 2% or so. But at the end of the day, this caps off this delivery guidance cut, caps off a very terrible week so far for Airbus. Started off at the back end of last week with concerns over software, this global recall that affected many airlines, and now this quality issue that's now affecting several hundred aircraft. At the end of the day, this can help Airbus have a little bit of breathing space to look and assess as it tries to ramp up more broadly its production into the years ahead. So I think for investors, this is a good moment to just have a bit of reality check.
So do you see any upside for Boeing from this?
Well, Boeing has its own positive momentum, but I think it's hard to see in the short term how any manufacturer can capitalize on the kind of near-term struggles that Airbus is going through. Frankly, we only have the options of Boeing or Airbus realistically that supply this commercial aviation market. But at the end of the day, I think for Boeing, who has seen off its own troubles, both Boeing and Airbus, they're very acutely aware of their supply chain concerns and the difficulties in the market and the complaints of customers if they don't get this right. That I think for the aviation industry at large, they're just acutely aware of the things that could go wrong and how they are all trying to get things right.
Danny, thank you so much. Bloomberg's aviation and transport reporter, Danny Lee, there with the very latest, of course, on this story that I feel like we'll have a lot more to talk about. Now, there have been concerns that Inditex, the owner of Zara, has been losing steam, but sales have risen at the world's biggest listed clothing retailer, unlike the slowdown hitting many of its peers. Well, joining us now for more is Bloomberg's opinion columnist, Andrea Felsted. She's also one of my favorite guests in this holiday season because we talk about Black Friday and some of the things that you can get good deals and, more importantly, what Gen Z wants, which just makes us feel cool. Andrea, thank you so much for joining us. So, these are very strong numbers when actually there are many concerns about the world economy and many concerns for retailers.
Exactly, and Zara's second biggest market is actually the US, and we've seen from a succession of companies that the US consumer, particularly the middle to lower income consumer, has weakened. So to deliver this, and also there was some unfavourable weather in some parts of the world, to deliver this is really quite impressive.
Yeah, but so, Andrea, I mean, what's the point of, like, Zara, and, you know, just anecdotally, there are a lot of people that we know that shop at Zara because they have this, like, middle, like, you know, it's priced well, but it's a little bit slightly more elevated than some of the, I mean, is it like a sweet spot?
It's definitely a sweet spot. Zara have been very, Inditex, particularly Zara, have been very smart in taking the selection up market. They still offer the entry-level goods, but they've elevated the range. So there are higher price point coats, jackets, real leather and suede bags, that type of thing. And they're really tapping into that sweet spot because as the luxury brands have moved up market, they've disenfranchised a lot of those, particularly what we call aspirational consumers. They're comfortable, but they're not super wealthy. The luxury brands, the handbags, have really become out of reach. So Zara is managing to appeal to those customers.
Overall, what's the outlook for retail and fashion? And I was speaking to someone who was saying actually maybe we should focus more on the resale because it's also like this, the vintage items that could come back. I don't know whether that is changing.
It definitely resale has become more popular, and it's for the same reason because the luxury brands have put the prices up so much. So consumers who still want a piece of that brand look to the resale market to maybe buy them at a little bit more reasonable price. And one of the trends that's really helpful that's emerging is actually not to have a really pristine luxury good, to have something that looks a little bit beaten up, distressed. That really plays into the hands of resale.
Okay, thank you so much, Andrea. As always, I love your pieces. I know you talked just a couple of days ago about how the younger folk prefer Cartier to Rolex. Now, Bloomberg's opinion columnist, Andrea Felsted. Now, Amazon's cloud unit is releasing its latest artificial intelligence chip today as it renews efforts to sell hardware capable of rivaling products from NVIDIA and Google. The accelerator, called Trainium 3, is a key element of Amazon's strategy to stand out in AI. Now, Amazon Web Services is the largest seller of rented computing power and data storage, but it has so far struggled to replicate that dominance among leading developers of AI tools. And the credit risk gauge on Oracle debt has closed at the highest level since the financial crisis. It comes after a flood of bond sales from tech giants amplified concerns that a bubble is forming in the artificial intelligence industry. Oracle has effectively sold tens of billions of dollars of bonds in recent months, though through note sales in its own name and via projects that it is backing. Now, Bloomberg has learned that Comcast is looking to merge its NBC Universal division with Warner Brothers Discovery after making a renewed offer for part of the company. Sources say Comcast aims to create a larger entertainment entity by combining the NBC networks, its film and TV studios, with theme parks at Warner Brothers. Coming up, we'll discuss the careful balancing act that the French president must perform as he begins a 3-day visit to China. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the European Union has reached a deal to phase out Russian gas faster than originally planned, a move that aims to finally sever ties between the bloc and its once primary energy supplier. The head of the International Energy Agency has described the decision as historic.
I think this is a historic day. Until recently, about half of the European gas demand was met by Russian gas. And now, today, European countries have decided to stop buying Russian gas as of 2027. As such, it is a historic day for Europe, for Europe's energy independence.
That was the International Energy Agency Executive Director Fatih Birol speaking exclusively to Bloomberg. Now, talks between the U.S. and Russia failed to reach an agreement on a plan to end the war in Ukraine. Meanwhile, EU ministers are meeting at NATO headquarters to discuss their next steps. And a Bloomberg opinion piece out this week argues that the EU is actually not capable of becoming a geopolitical player to hold its own against Russia, China, and the U.S. Well, the author is Bloomberg's international affairs columnist, Marc Champion, and he joins us now. Marc, first of all, congratulations on some really thought-out pieces. This is kind of the story of the moment, trying to figure out what happens amongst all of these power players. Where does the EU fit into this, and why do you think they haven't been able to just have a greater voice?
Yeah, I mean, so in the past, they would have been because the Americans would have drawn them in. And so they would have been part of the conversation. The Americans would have wanted to keep them on side. Joe Biden would have, Obama would have, and would have wanted to kind of present a unified front. The Trump administration just isn't interested. And therefore, Europe has to really, push its way to the table. It really doesn't have the means to do it. Ultimately, in this kind of diplomacy, the return of geopolitics, then ultimately you have to have the threat of hard power to be taken really seriously by a country that is your opponent, like Russia. Yeah. He doesn't have it.
Does Russia and does Vladimir Putin want a deal? And no. Actually, does he want? I mean, if he wants to keep all the territories. Is this, are these talks just smoke and mirrors?
No, I think they're very useful to Putin. It's the Americans who came to the Russians, with this round of talks. It's been very useful. It headed off some momentum that looked like might have been building for Trump out of frustration to do something more with sanctions, to talk about sending Tomahawk weapons to Ukraine that might be able to reach further into Russia and hit some of the missile-producing factories and so on. That's now off the table. So this is useful for the Russians. If they can get the Americans to drive through, their list of demands, they will certainly take that. But it's a win-win in a sense because, as Putin sort of made clear, this is a way also for him to try and divide the Americans from the Europeans, to present the Europeans as the problem, the obstacle to peace, and then, also the Ukrainians. If the Americans, sort of take that bait, then they will start putting more pressure on the Ukrainians, which takes the form of taking things away. They've already taken away the provision of paid-for weapons. They would then start taking away the ability to buy weapons at all via Europe, or they can also take away ultimately intelligence sharing, which would be catastrophic for the Ukrainians. So they're in a very, very hard place, the Ukrainians, and for the Russians, they're sitting quite nicely. Yep. They win either way.
What do you think happens next? Are we going to have some kind of peace agreement, or there's also so much pressure at times to hold elections in Ukraine? What does that mean for Volodymyr Zelensky?
Yeah, so I think those are two kind of separate questions. The first one, I think we're a little ways away from a summit between Trump and Putin where they declare a deal. It's hard to see whether, again, the Americans will be walked back and will kind of, walk away for a while. Or whether they will this time simply try to sort of plow through and really apply pressure to the Ukrainians that's very painful and create a sort of crisis in the alliance. I'm not quite sure, which way it will go this time. And on the elections issue, until now, it's really been just a Russian ploy. If you could get forced elections during a war in Ukraine at a time when they really, logistically it wouldn't be possible, where it's just another way of creating weakness inside Ukraine. Now, after all the corruption issues, the Ukrainian, the president's office kind of falling apart in any case as he gets rid of even his top aide, you can see a more useful role for elections or even for a crowning, an anointing of a replacement to Zelensky to see the way through to elections after the war is over.
So many interesting angles that we're, of course, keeping very close eye on. Marc, thank you, as always, Bloomberg opinion columnist Marc Champion. Now, the French President Emmanuel Macron is beginning a 3-day state visit to China with the issue of Taiwan expected to take center stage. Let's get more on what to expect with our chief Asia correspondent, Rosalind Matheson. Ros, some careful treading for President Macron to do then.
Well, that's right. Actually, a lot of careful treading for Macron to do. He's just arrived in China because he's got a variety of sensitive issues here. Obviously, the tensions between Japan and China over Taiwan, the recent comments made by the Japanese Prime Minister. China seems keen to try and enlist Macron somehow in that, in their efforts to isolate Japan. So Macron really doesn't want to see tensions increasing between China and Japan, but also he doesn't want to be caught in the middle and having to make a lot of statements about where he sees Taiwan. So there's that issue. There's also the issue, of course, of Russia's war in Ukraine, and Macron, they're very much representing the Ukraine perspective and how Europe sees this and wanting to push China to use its own leverage against Russia economically. So will China listen to that one? So there's a delicate dance also. And of course, obviously the third leg of this is business, trade, investment, and that relationship, not just between China and France, but China and Europe, has been very fraught. And so can they come away with this with any kind of understandings around trade? And both have a lot of strong interest going into these conversations as a result.
So, Ros, what are both sides actually hoping to achieve?
Well, one thing that France very much wants to achieve out of this, and they are taking a lot of CEOs as a result, is Macron wants to push China not to go towards tariffing imports of pork and dairy. This, of course, would be retaliation for the tariffs that the EU put on Chinese electric vehicles last year. They seem to have solved cognac as an issue around that, but there's still in the ether the possibility that China might decide to put tariffs on agriculture. So again, that's pork and dairy, and that would be quite important for the French agriculture industry. So obviously Macron wants to press that point. He's taking some CEOs, including Gnodde, obviously, as a result. Separately, he's taking those CEOs to get some business deals done. China wants to get some business deals done. They want to come out of these conversations with some meetings, with some deals in the can, so they've got both that incentive. And for China, one question, of course, is do they dangle critical minerals, rare earths? Because, of course, Europe, like everybody else, needs critical minerals, and China has a lot of them. So does China bring that into the conversation just to show in a way that it does still have that leverage over the EU?
Ros, what do you think? I mean, do we know about the two leaders getting along? A lot of this diplomacy is actually if you also like each other and find common ground.
Well, that's right. And they have had their ups and their downs. And of course, Macron was really taking much of the hard line on behalf of the EU for a while on trade with China. But the last time they met, they did seem to actually manage to get on okay. And they do have that level of, history and rapport that's there. And so, as you say, that personal relationship does very much matter. We've seen it very much be the case, obviously, also when it comes to Xi Jinping and Donald Trump, the US president. They've managed to get deals done when they're both in the room together. And another leader for whom it might matter pretty soon is the UK Prime Minister, Keir Starmer, because there are reports just coming out that Keir Starmer might be making his way to China at the end of January as well. And he, too, would be facing a lot of delicate issues if or when he does so. And again, that relationship between Keir Starmer and Xi Jinping is much less solid than perhaps some of the rapport that we might see on display in the next couple of days between the French president and the Chinese leader.
Ros, thank you so much. As always, Bloomberg's chief Asia correspondent, Ros Matheson. Up next, it's a Bloomberg Brief, and this is Bloomberg.